What is happening, crypto fam? Get ready to dive headfirst into the most electrifying developments shaking up the digital asset universe. The pace is furious, the news is breaking, and you absolutely need to be in the know. We're kicking things off with a deep dive into Bitcoin privacy, exploring the evolving risks and incredible opportunities that institutional investors are facing in today's increasingly regulated world. What does this mean for the future of secure digital transactions? Next up, we're analyzing the shifting sands of market power. Prepare for a fascinating look at Bitcoin's dominance and what it signals about the current crypto cycle, especially concerning the participation levels of altcoins. Is the landscape changing dramatically, and what does that mean for your portfolio? Then, we're looking ahead to the future with a compelling analysis of the 2025 Bitcoin bull run. We'll explore why this cycle is predicted to be structurally different and how you can position yourself to potentially capitalize on moves that could see Bitcoin soaring past the $130,000 mark. This is the forward-thinking strategy you've been waiting for. And finally, we're bringing you a prediction from a prominent public figure that's sending ripples across the globe. We'll unpack Eric Trump's bold call on Bitcoin and explore the broader implications of this statement in the context of a significant global crypto shift, touching on macro-influencer sentiment and growing institutional adoption in Asia. You don't want to miss a second of this. It's your essential download for staying ahead of the curve. Hit that like, subscribe, and ring the bell so you never miss an update. Navigating the digital vault. The world of digital assets is in constant flux, and understanding the underlying mechanisms of privacy and regulation is paramount, especially for those managing significant capital. This is why the evolving landscape of Bitcoin privacy for institutional investors is not just a technical discussion, but a critical strategic imperative. In an era where financial institutions are increasingly exploring and adopting cryptocurrencies, the need for robust privacy solutions that comply with existing and emerging regulatory frameworks has never been greater. For large players, the stakes are incredibly high. Unlike retail investors who might prioritize anonymity for personal reasons, institutions require privacy for a complex mix of reasons, including regulatory compliance, competitive advantage, and the protection of sensitive trading strategies. The challenge lies in balancing the pseudonymous nature of Bitcoin with the stringent Know Your Customer, KYC, and anti-money laundering, AML regulations that govern traditional finance. Institutions must demonstrate to regulators that they can prevent illicit activities while still offering a degree of transactional privacy to their clients and for their own operations. This involves sophisticated methods such as zero-knowledge proofs, confidential transactions, and other advanced cryptographic techniques that can obscure transaction details without compromising the integrity of the blockchain or violating compliance requirements. The opportunity here is immense. Institutions that can successfully integrate privacy-preserving technologies into their Bitcoin operations will not only gain a competitive edge, but also pave the way for broader institutional adoption. They can offer more sophisticated financial products and services, attract a wider range of clients, and operate more efficiently in a market that demands both innovation and accountability. However, the risks are equally significant. A misstep in privacy management could lead to severe regulatory penalties, reputational damage, and loss of investor confidence. Furthermore, the technological hurdles are substantial. Implementing and managing these advanced privacy solutions requires significant technical expertise and infrastructure investment. The ongoing development of these technologies means institutions must also stay abreast of the latest advancements and adapt their strategies accordingly. This dynamic environment presents a unique set of challenges and opportunities, demanding a nuanced understanding of both the technical intricacies of Bitcoin and the complex regulatory demands of the global financial system. The ability to navigate these waters effectively will be a key differentiator for success in the institutional crypto space. This critical balance between privacy and regulation is sparking intense debate among industry participants and regulators alike, with many seeking clearer guidelines. But before we dive deeper into that complex world, hold onto your hats, because we're about to shift gears and explore the shifting tides of market dominance in the crypto space. The shifting sands of dominance. In the dynamic and often volatile realm of cryptocurrencies, the concept of market dominance is a key indicator of the overall health and direction of the ecosystem. Understanding which digital asset is leading the pack and how that leadership is changing provides crucial insights into investor sentiment, technological adoption, and the broader economic forces at play. This is why the recent trends in Bitcoin's dominance and the subsequent decline in altcoin participation are so significant for anyone invested in or observing the crypto market. The narrative around Bitcoin's dominance has always been a central theme in crypto discussions. Historically, Bitcoin, as the first and most well-known cryptocurrency, has often held a commanding share of the total cryptocurrency market capitalization. This dominance is typically seen as a sign of stability and a benchmark for the entire market. When Bitcoin's dominance rises, it often signifies a flight to perceived safety within the crypto space, where investors retreat to the most established asset during times of uncertainty or consolidation. Conversely, when Bitcoin's dominance falls, it usually correlates with periods of high altcoin activity, often referred to as altcoin seasons, where investors rotate into smaller, potentially higher-growth cryptocurrencies, seeking greater returns. However, the current cycle presents a more nuanced picture. While Bitcoin has maintained its position as the market leader, there's been a noticeable trend of decreased participation and enthusiasm for altcoins compared to previous cycles. This could be attributed to several factors. Regulatory uncertainty surrounding many altcoins, particularly those deemed securities by various global authorities, has made institutional investors cautious. Furthermore, the sheer volume of new altcoins launched, many with questionable utility or sustainable business models, may have led to investor fatigue and a greater focus on the proven track record and network effects of Bitcoin. The technological advancements and growing adoption of Bitcoin, including the development of Layer 2 solutions like the Lightning Network, also contribute to its enduring appeal and dominance. These developments enhance Bitcoin's utility as a medium of exchange and store of value, making it more attractive to a broader range of investors, including large institutions. The decline in altcoin participation, therefore, isn't necessarily a sign of overall market weakness, but rather a potential maturation of the market, where investors are becoming more discerning and prioritizing assets with strong fundamentals, clear use cases, and robust security. This trend suggests a potential shift towards quality over quantity, with investors favoring established players like Bitcoin over speculative altcoin ventures. The implications for the market are substantial, potentially leading to a more consolidated and stable crypto landscape, albeit one with less speculative frenzy. This shift is prompting many analysts to reevaluate their strategies, with a keen eye on where the smart money is flowing. It's a fascinating look at market dynamics, but speaking of looking ahead, get ready for some groundbreaking predictions about the future of Bitcoin's price trajectory. The $130,000 question, a new era for Bitcoin. Predicting the future price of any asset is a notoriously difficult game, but when those predictions come with detailed structural analysis and a specific timeframe, they demand attention. The forecast for a significant Bitcoin bull run in 2025, with targets exceeding $130,000, is generating considerable excitement and debate within the investment community. This isn't just about a simple price surge. It's about understanding the underlying economic and technological shifts that could underpin such a massive move. The core of these predictions often lies in the concept of a structurally different bull run. This implies that the forces driving the market in 2025 will not be a simple repeat of previous cycles, like 2017 or 2021. Instead, analysts point to several key factors that could create a unique and potentially more sustainable upward trend. Firstly, the increasing institutional adoption of Bitcoin is a game changer. Unlike previous cycles, where participation was largely retail-driven, we are now seeing major financial institutions, asset managers, and even some corporations actively investing in and holding Bitcoin. The approval of spot Bitcoin ETFs in major markets, for instance, has opened the floodgates for traditional capital to flow into the asset class, providing a new layer of legitimacy and demand. This institutional demand is often less volatile and more long-term focused than retail speculation, providing a more stable foundation for price appreciation. Secondly, the halving events, the programmed reduction in the rate at which new bitcoins are created, continue to play a crucial role. The next halving, expected in 2024, will further restrict the supply of new Bitcoin entering the market. When combined with sustained or increasing demand, this supply shock is a classic economic driver for price increases. Analysts believe that the impact of this halving, coupled with the aforementioned institutional demand, could create a powerful upward momentum leading into 2025. Furthermore, technological advancements within the Bitcoin ecosystem, such as the continued development and adoption of the Lightning Network for faster and cheaper transactions, enhance Bitcoin's utility as a medium of exchange. As Bitcoin becomes more practical for everyday use, its value proposition as both a store of value and a transactional currency strengthens, attracting a wider user base and driving demand. The growing global macroeconomic uncertainty, coupled with inflation concerns in many economies, also positions Bitcoin as an attractive alternative asset and a potential hedge against traditional financial system risks. Investors are increasingly seeking assets that offer diversification and protection against currency debasement, and Bitcoin, with its fixed supply and decentralized nature, fits this profile. The combination of these factors, institutional adoption, supply reduction, technological utility, and macroeconomic hedging, paints a picture of a bull run that could indeed be structurally different, with a higher potential ceiling and a more robust foundation than seen in the past. Positioning for such a move involves understanding these drivers and potentially allocating capital strategically, perhaps through dollar-cost averaging or by utilizing investment vehicles that provide exposure to Bitcoin's growth. This forward-looking analysis is creating a buzz, with many investors eager to understand the best entry points and strategies. It's a bold vision for Bitcoin's future, but what happens when major public figures weigh in with their own predictions? We've got a big one coming up next. Global Currents, Trump Jr.'s Bitcoin boldness and Asia's institutional leap. In the rapidly evolving world of digital assets, the influence of prominent figures and the momentum of institutional adoption in key global regions are critical factors shaping market sentiment and future direction. The intersection of these elements is particularly potent, and a recent bold prediction from Eric Trump, alongside significant shifts in Asian institutional interest, offers a compelling snapshot of the global crypto landscape. Eric Trump's recent public statement regarding Bitcoin has generated considerable buzz. While the specifics of his prediction, whether bullish or bearish, and the timeframe, are subject to interpretation and commentary, the mere fact that a prominent figure associated with a major political family is engaging with Bitcoin signals a growing mainstream awareness and acceptance of the cryptocurrency. Such endorsements, or even strong opinions, from influential individuals can sway public perception and encourage broader exploration of digital assets. For many, it signifies that Bitcoin is moving beyond niche tech circles and entering the realm of mainstream financial and political discourse. This increased visibility can translate into heightened curiosity, investment inquiries, and potentially increased adoption. The impact of such statements should not be underestimated, as they often serve as catalysts for conversation and can influence the sentiment of a significant portion of the population. Beyond these high-profile pronouncements, the underlying global crypto shift is being driven by powerful institutional forces, and Asia is emerging as a particularly vibrant hub. Reports indicate a substantial increase in institutional adoption and interest across various Asian markets. This surge can be attributed to several factors. Firstly, regulatory clarity is gradually improving in some Asian jurisdictions, providing a more stable environment for financial institutions to engage with crypto. Secondly, a growing number of Asian businesses and investors are recognizing the potential of digital assets as both an investment class and a technological innovation. Countries like Singapore, Hong Kong and parts of Southeast Asia are becoming centers for crypto innovation and investment, attracting significant capital and talent. This institutional adoption in Asia is not just about trading. It includes investments in crypto infrastructure, blockchain technology development, and the creation of new digital asset products. The participation of Asian institutions adds considerable depth and liquidity to the global crypto market, influencing price discovery and overall market stability. Furthermore, the interplay between macro-influencer sentiment and institutional adoption is crucial. As more influencers and public figures speak about crypto, and as institutions in major economic blocs like Asia increase their exposure, a powerful feedback loop is created. This loop reinforces the legitimacy of digital assets and can accelerate the pace of mainstream adoption worldwide. The global crypto shift is therefore not a monolithic event, but a complex interplay of individual opinions, technological progress, regulatory developments, and strategic capital deployment by major financial players, with Asia playing an increasingly central role in this unfolding narrative. This confluence of macro sentiment and institutional activity is undeniably shaping the future of digital finance. We've covered a lot of ground today, but don't go anywhere yet. We've got a rapid-fire recap coming your way. And that's a wrap on today's essential crypto updates. We saw how institutions are navigating Bitcoin privacy in a regulated world, analyzed Bitcoin's dominance against a backdrop of declining altcoin participation, explored the exciting potential of a structurally different 2025 bull run targeting over $130,000, and unpacked Eric Trump's bold prediction amid a global crypto shift with major Asian institutional adoption. Don't miss out on any future developments. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell, share your thoughts in the comments, and follow us on all social media platforms for more. Stay informed, stay ahead.